So now that you understand what to invest in, the next big question is, when do you actually start investing? Every time someone asks me this, I usually take them through a simple 2-step checklist. And if you can check these off, that means that you're ready to start investing. The first question is, do you have high interest debt over 7 to 12%? If you do, you should pay that off before investing a single dollar. Paying off debt is like getting a guaranteed return. Usually if someone promises you a guaranteed profit, they're probably scamming you, but in this case, it's actually true. Think about it this way, the stock market averages around a 10% return, but if you're paying 25% interest on credit card debt, paying that off first is like getting a guaranteed 25% return. It's the easiest win that you'll ever get. Say you owe $10,000 on a credit card with a 25% interest rate. That's $2,500 annually, money that automatically gets deducted from your bank because you have to pay off that interest. And this credit card debt acts kind of like a leak in your finances, where if you're trying to fill up your gas tank and there's this massive hole in it, you want to fill up that hole before you put in more gas. Instead of throwing $10,000 into the stock market, if you use it to pay off your debt, you're instantly saving $2,500 with zero risk. That's kind of like making $2,500 in the stock market without any risk, and these types of returns are very hard to find. The second question is, do you have a 3 to 6 month emergency fund? An emergency fund is like a safety net just in case life gives you unexpected expenses. If your car breaks down, you have a flat tire, or maybe if you lose a job, you want to make sure that you have an emergency fund. And if you don't have an emergency fund, you might end up relying on a credit card, or even worse, selling your investments at a bad time, which then compounds your losses. So before you put in any money into the stock market, make sure that you check off these 2 boxes. Your high interest debt is gone, and you have an emergency fund.